So last night we had a flash crash. You can't bet on when flash crashes will happen, but there's a pretty sure bet about what time of day it will happen, and it's always after the US markets have closed and before Asian markets have started trading. There's that time where American traders are in the gym or in a bar or on their way home. European traders are going to bed or are in bed, and Asian traders haven't got up yet, and there's really thin liquidity. So there's a lot of stories about what caused the crash last night. It's pretty clear it started in the yen crosses. I think that the story, only one analyst so far from, I think it's Credit Agricole in Hong Kong, said the market was really short of yen, which means that they were long all of the yen crosses and they were long dollar yen, which, you know, if you block out, you could see potentially we were starting to make a base, I suppose, in dollar yen. And you could, you know, make an argument that dollar yen was oversold. But anyway, he said the market was long yen and, short yen. Long yen crosses, in other words, and it dumped on all their stops. And this is a really good lesson in how connected these markets really are, because all of the other moves, if it, you know, it's not going to be it's never an across the board move. And it, you know, the story is, I think Aussie yen is where it happened, the most obvious one because it was the biggest mover. But this went all the way across the board. All of these other markets moved because they're all connected by computer trading and arbitrage. So everything took a dump on it, including the dollar majors. And even though it looks like the one that moved the least or became the safe haven was the euro. So we'll take a look at that. And it also caused moves in some really sharp moves in some other markets. So, for example, this meant that the safe haven move meant the euro was bought against the Aussie. That's pretty obvious. And so it looks like we had a false breakout spike long in euro Aussie, but we had a huge move in euro pound. So people didn't want pounds either if we were going to have a flash crash. So although the most obvious one that was worst affected was the Aussie, the pound was also pretty badly affected, which it puts us back to where we are this morning. And are we going to sell for a retest on these rallies? I would say at the moment, probably we haven't rallied enough, and there's quite a bit of consolidation to come from these. So if we take a look at where we're going to look back to, I really do think, you know, when you've got a tail this long, it becomes almost untradeable for a bit, except counter trend, and that we should look back to, you know, if we take the most recent swing. So here's the biggest one, the biggest mover where we've got 5 waves down is the Aussie yen. We're well through this 236 fib resistance, which was at 73.73. 75.67 is where the next resistance is going to come. But really, the 61.8 retrace and the daily 20 moving average is where the next sort of serious resistance is, and these previous lows. And that brings us all the way back to around 78.70. So I think potentially we should rally all the way back there, really, before we continue lower. So big bounces and big corrections. I think the biggest guidance will come probably, remember this week is ADP farm jobs numbers and non-farm payrolls. And so we may have to wait for that. And these markets will just drift back higher again. So there are a couple of interesting ones, I think, in the cross markets that are quite interesting. For example, in the Euro Aussie, this became then a false breakout. This was a major level that we spiked above last night in Euro Aussie. It was a big 50% retrace of the highs that we made in September 08 to the lows that we made in 2012. And we tested this level in 2015, and it was the highs as well in September, October of this year. So everybody, I think, was looking for a reversal at this level, and that crash spiked us up through it and ran basically all of the stops of the people who were already short. And, you know, not unreasonably, there was some pretty nice price action to be short. There was a pretty good looking shooting star reversal candle. So now that we've run all of these stops, and if this is a big daily false breakout, then I think that we could look for a really nice reversal going the other way. And if we see that, I think we need to draw the trend line from the beginning of December lows and the hourly 200 moving average. A break of this support would be a really nice short entry in Euro Aussie after the false break higher overnight. So